All right. Well, thank you again for that great keynote, Ram, and that perfectly sets the stage for what comes next, which is a panel on the trends in climate tech investing. So as I call your name on this panel, please join the stage from my left and take a seat. We have the honor and pleasure today to be joined by Lara Krashour, Head of Climate at Second Muse, Andy Golach, Partner at SOSV, Elizabeth Esuak, excuse me, Elizabeth, I apologize for that, an associate at Montauk Capital, familiar face Ram Kumar Krishnan, Head of Cleantech Incubation at LG Nova, and last but not least, Matt Harbaugh, the Executive Director of the U.S. Research Impact Alliance and Managing Director of Mountain State Capital, who will serve as today's moderator. So, yeah, please. So please join me in giving our next panel a round of applause. Matt, the stage is yours.
Okay, thanks, Daniel. Oh, it works. Great. Okay. Hi, everyone. I'm Matt Harbaugh, and as Daniel said, I'm a partner at Mountain State Capital, which is a local seed fund. And I also started a nonprofit about 5 years ago that works with a lot of startups nationally, but a lot of them are in the energy space. And we're going to talk a little bit at the end of the day about one of the initiatives we're involved with, which is the READY Consortium. But now we're going to talk about investing and what are the trends. Quick show of hands. How many people in the audience are working in a startup or trying to create a startup or generally interested in startups? All right, we've got most of the room. Of those of you who are involved with startups, how many are finding it very easy to raise capital? I'm impressed we have someone who's raising their hand. Great. Good for you. We're gonna get you on the next panel up here because that'll be useful. So we've got a great panel here of investors to talk about what's going on in the startup investment landscape, especially in the energy and sustainability space. As some of you may be aware, there have also been changes over the last year or so on the government funding space, which is impacting startups. So we'll touch on that a little bit. But why don't we go ahead and introduce, I guess Daniel already did this a little bit, our panel. So we have Laura here, Andy, Elizabeth, and Ram on the end. And so in each of their cases, the organization that they are representing is slightly different and takes a slightly different approach to investing in energy startups. And let's see if I can do a good job of summarizing this quickly, but I'll ask you guys each to sort of jump in. So we'll go one at a time. So Laura, your organization, Second Muse, as I understand it, you guys help to create accelerator programs and funding programs around the country, or around the world actually, to support deep tech startups, including energy startups. Did I do a good job?
Nailed it, yeah.
So can you tell us a little bit about, especially when it comes to energy startups, where are you guys focused and what types of problems are you trying to solve?
Hi, everyone. I'm Lara Krashour. I'm the head of climate at Second Muse. It's really wonderful to be here, and thanks so much for the kind invitation. This is my first Energy Week, so super excited to be out here. So yes, as Matt was sharing, Second Muse, we are a global company. We focus on economic development in both the climate and the well-being sectors. Our mission is really all about how do you build economies that are good for people and protect the planet. And we do that in a number of ways. The first is we support entrepreneurs. We really see entrepreneurs as being the catalysts for change, especially in moments of economic transition. And so we run a number of programs. Over our 17 years as a company, we've run probably 120 different programs to support entrepreneurs across a wide variety of sectors. And probably the most relevant program to share with the crowd today is our Scale for Climate Tech program, which is funded by the state of New York and specifically supports energy startups who are hardware companies or have hardware-enabled technologies really reach commercialization by helping support their manufacturing. And so over the 10 years now that we've run that program, we've supported over 100 entrepreneurs who have collectively raised over $1.5 billion. So it's a really exciting program, and happy to talk more about that one. Two other ways in which Second Muse, works on economy building in addition to the entrepreneur support. We also work with what I call market driving actors, think governments, corporates, philanthropy, and helping them think through their investments in economic development within the energy sector. And so a good example of that is we're currently working in the state of Oregon, advising the government on how to develop a climate innovation economy in the state. And then the last that I will mention is that we also design and manage capital. So we do a market assessment, we look to find the capital gaps, and then we design fit-for-purpose financial instruments to help to fill those gaps. And so a good example of that is we're currently managing a $55 million fund on behalf of the state of New York to support the commuter van industry in New York City. So we sort of sit at the intersection of the conversation today. We're not a traditional investor, we're not a traditional accelerator, but happy to share the perspectives that we're hearing from the investors and the startups we work with in terms of key trends that we're seeing today.
And so since a couple of the programs that you mentioned are New York based, I'm sure people in the crowd are wondering, do they need to be in New York to take advantage of these?
No, they do not need to be in New York to take advantage of the programs. It's a global program. We have a lot of entrepreneurs internationally who are looking to enter the U.S. market. So no, there's not a requirement that a New York-based company to participate, yeah.
Okay, and so anyone who's taking notes, just remember, Second Muse, that's what that's called. Look it up. Okay. Next, we're going to talk to Andy Golak, who's a partner at SOSV. And Andy, you run the investment operations for the deep tech sector. Can you tell us a little bit about what you're looking for? And as I understand, you guys have over $1 billion under management?
Yeah, so I'm a partner at SOSV. SOSV has a couple different operations inside of, or investing offices inside of it. One of them in San Francisco, one in New York City, and one in Newark, New Jersey. So I work at the team in Newark, which is our physical sciences program. So we're investing in early stage companies, typically about university spin out stage. We've had several of our companies go through Scale for Climate, which is a great program. But at this point, we are about $1.5 billion in assets under management across all of our funds. Currently investing out of our fifth fund, which is a $300 million US fund. We invest in across the firm, about 70 new companies a year. With the group I'm with, inside of SOSV, it's about 30 companies. The team I'm focused with and am working with, we're investing primarily in energy, physical sciences, and manufacturing technologies. So everything we do is a hardware product. It exists in the real world. We don't do any software investments. And our facility in Newark, New Jersey is a 35,000 square foot laboratory or prototyping facility with a machine shop, 3D printing laboratories, an electronics lab, and a chemistry lab inside of it. We do work with people in person. They don't have to move to New Jersey. They just have to spend some time working with us, prototyping with us, until they raise their next round of capital and go back to wherever it might be that they came from or want to locate their business permanently.
And I'm sure the fact that you said you're not looking for software companies is a refreshing thing for a lot of people in the audience. So all the hard tech people here are really excited about that. So that's great. So next we've got Elizabeth, and I'm going to screw up your name just probably like Daniel did, but Isaac, am I close? Ishak. All right. So Elizabeth Ishak is a native of Pittsburgh and got her BS here at CMU. And she's an associate at Montauk Capital, where they have a venture studio and a fund, and you're involved with both of those. Is that right? Can you tell us a little bit about it?
Yeah, hi everyone. Really nice to be back on campus. Like you mentioned, I studied biology and biomedical engineering here, so nice to be back this time, spending time on stage instead of in labs where I spent a lot of my time in undergrad. But yeah, Montauk Capital, we're an early stage, both venture fund and venture studio based in New York. We're investing in building across what we call the electron economy, which to us means anything within energy, resilience, adaptation, efficiency, as well as the digital backbone that underpins all of that. And on the fund side of the house, we're investing mostly in Series A and B asset-light scalable companies, while on the studio side of the house, we can build really anything within where we see white space in the electron economy. So this could be anything from a software-only business to a hardware deep tech business. We have really a range of companies that we're building, including space-based solar to a grid intelligence platform for increasing the speed of grid interconnection. So really a range of companies at Montauk Capital, and we're a first-time fund in New York.
There's sort of a New York, New Jersey theme here, it seems. So Ram, can you stop this? Can you give us something else?
Yeah. Well, I'm part of LG Nova. LG Nova is an incubation arm of LG. We are, unlike what Andy mentioned, we're actually focused on software-only businesses, particularly in the multi-sector AI, digital healthcare, and clean tech as being the focus areas. We have a very different model, which is an outside-in innovation compared to traditional corporate incubation, which is always bringing R&D from the labs out into commercial world. We actually bring in entrepreneurs from the outside world. They actually become EARs and founders of the spin-outs that come out of LG Nova. But they also collaborate and partner with other startups in the ecosystem that we bring. We have over 1,000 startups I've looked at in the last couple of years, and so we short select a few promising startups, and we work with them on either expanding their capabilities, licensing their technologies, or other ways that we can actually work together. And I think what's unique about also LG Nova, so we're based in the California area, but we also have a partnership with state of West Virginia, and we're actively bringing an ecosystem here to bring startups as well as entrepreneurs in the state of West Virginia. And so a lot of exciting collaboration that we're doing with the state, and looking forward to more actively also participating if RITI is able to kind of cross the finish line that you're working on.
So in your keynote speech, you talked a lot about sort of the changes to grid and demand for load that are happening right now. And as we all know, a lot of that's being driven by the boom in AI and data centers. I assume that's a theme that everybody is looking at right now when they're looking for investments. Is that the dominant theme that you're looking at? Are there other things that you're interested in? And let's start with Ram on this one.
Yeah, I think we don't have any particular only focus area within energy. We're broadly looking at all areas of energy. Some ideas are in energy management. Like I mentioned, Pado Energy is a spin-out that was launched from LG Nova. They're focused on powering and managing energy for data centers using software solutions. We're also looking at sector coupling. How do we actually bring benefits from multiple different sectors? We're working on a solution that can potentially be used in fintech as well as in clean tech, and we're also looking at really broadly how do we actually solve asset management problems at the grid level, because intelligent way to manage assets means they last longer, perform better. So there's an entrepreneur that's looking in that space, and so we're pretty open in the energy space.
For your organization, do startups need to have some applicability to LG products?
No, not at all. In fact, actually, almost all of the spin-outs from LG Nova have very limited connection with actually the LG business. That's intentional because LG wants to really spin out and explore new areas that they have not actually been present, and that's really part of and the mandate for LG Nova is to spin out new business that are completely different. So we're even going in the social media area as well, spinning out a company in that space.
Well, that's great. That wasn't the answer I was expecting to hear. All right. Elizabeth, how about you? What are you seeing? What are you liking? It sounds like you guys are software focused, so I'm guessing grid management is your big area?
More software and software-enabled hardware focused on the fund side of things, but really anything on the incubation side of the house. On incubation in particular, we've been spending a lot of time on geothermal, which is actually why I joined the team in December. I spent a lot of time on geothermal at my last fund as well. I think we've been focused generally on technologies that can enjoy the advantages of the current political landscape as well as data center demand. So I think at that intersection, anything for us really around clean firm power, we're very bullish on geothermal, much more skeptical on nuclear and SMRs, also around grid enhancing technologies, yes. So that's anything within software. There's also a lot of interesting solutions, like a company, AssetCool, is developing a photonic coating that directly is applied to transmission lines and provides a 30% permanent capacity increase. So I think there's really a range of solutions. But back to geothermal, we're actually currently building a company in that space. We're really big fans of enhanced geothermal systems in particular. I think one of the members of the House of Representatives put it well recently. He said Republicans like drilling, Democrats like clean energy, and everyone likes baseload power. So I think that's one in particular that's really has a lot of supports from both sides of the aisle, and we've been spending a lot of time there. The DOE even recently just announced $171 million in funding for new geothermal field scale tests, which is quite exciting to see something come out of the DOE of that scale, and hopefully we'll see much more come out for geothermal.
Yeah, and I mean, with geothermal in mind, it's interesting how much that's risen in sort of the mindset of people recently. As I understand it, the DOE just reorganized sort of how they describe different parts of their organization and the labs and things, and the lab that's here and in Morgantown, which is NETL, is now part of the overall organization that includes geothermal, and they've really highlighted that as a focus area.
Yeah, I think another reason it's highlighted is the Secretary of Energy, Chris Wright, used to be on the board of Fervo Energy, which is one of the leading geothermal companies, the enhanced geothermal company in the space. So I think that's another reason why it's really kind of risen to the top in recent days.
Yeah, it's exciting to sort of see a whole new sector start to hopefully bubble up with new innovation.
Yeah.
That's great. So Andy, how about you? What are you liking? What are you seeing out there?
Yeah, maybe it's useful to just kind of like look backwards a little bit and think about the environment that we're coming out of and what we're moving into. Right? If I think about like Biden era industrial policy, it was largely a theory that, okay, we're going to stimulate the supply side through subsidies and create a bunch of abundant electrons and build businesses on the back of those abundant electrons. So we probably as investors, we all saw those businesses that were projecting $20 a megawatt hour. You'd be able to get it 80% of the time, and that would really create this new manufacturing base along those electrons. Well, two things happened. One, we had an administration change and that policy came away. And two, we had a new buyer enter the market. That was data centers that really weren't sensitive to that lower price. They're willing to pay basically any price that the market would bear. And so that's an interesting dynamic where the energy industry, the generation industry really hasn't had that, where there's a price insensitive buyer coming onto the market. So that's why there's all this investor interest in data centers, is all of a sudden now there's more margin to be realized in these power production technologies. But at the same time, it opens up, or it creates a dynamic where ratepayers are paying more on the grid. And so we're also very interested in technologies that are going to create efficiencies elsewhere in the grid, whether you think about the built environment environment. So we've done ground source heat pumps along those lines, a little bit different version of the geothermal play. We've been investing in batteries to really sort of stabilize the grid. And we've actually seen huge growth in battery deployments in the ERCOT region in this administration. And so we're really looking at everything we were still looking at. What I think has really changed, or what has moved, is a lot of the more speculative investments have become unviable with the new sort of price of electricity in the market.
So, yeah, if I'm hearing you correctly, you're saying even though there are these price-insensitive buyers on the data center side, there are still technologies that had been receiving investment in the past that just aren't viable anymore. Can you give us an example of something like that?
Yeah, I mean, I think the example I would point to is direct air capture. It's not something we ever looked at SOSV. It's not an investment we ever made. And that was largely because, one, we just couldn't make the economics pencil. Like, you needed negative electricity prices to make the economics make sense. And so that would be one example.
Do you feel the same way about carbon capture? I mean, here we do, in this region, there's a lot of focus on natural gas, but it used to be anytime you talked about natural gas generation, you had to add in and carbon capture. Is that also not a thing anymore?
I think that's a slightly different scenario. So we have made some investments in point source carbon capture, and we are hearing some of the hyperscalers say they want to put a point source carbon capture on the back end of their combined cycle power plants that they're building as well, which is an interesting dynamic. I think it remains to be seen, like, if that will come to reality, but it is an area we've been looking at and been making investments in. And there are other geographies outside the US where point source carbon capture does seem to have a market.
Great, thanks. Laura, how about you? What are you seeing? What are you liking? What are you hearing other investors say that they like?
So in terms of the kinds of technologies that we typically support through our programs, we're a bit sort of sector agnostic. So I'd say it's kind of like 4 key areas that we typically support: buildings, transportation, industry, and energy and the grid. What we're seeing currently, though, is certainly a lot of activity and a lot of solutions coming forward within the energy sector. So anything that is touching the grid technologies, anything that's making it easier to increase capacity of the grid or optimize the grid or make it more reliable, more resilient, we're certainly seeing a lot of activity there. Also, you had mentioned battery technologies, definitely seeing a lot of interest in batteries. Geothermal, enhanced geothermal is definitely an area that we're seeing a lot of growth in as well. And then also I would say adaptation and resilience technologies, which are not disconnected from the energy sector as well, certainly very much related, but we're increasingly seeing that as an investable area and a place where we're actually seeing deal counts increase. I think there was something like 100% increase in deal counts for adaptation and resilience technologies, whereas overall we're seeing, while investment and capital is still flowing within the sector, deal counts are generally decreasing. We have fewer deals that are larger deals, but for later stage technology kinds of companies. But adaptation and resilience is the space where we are seeing an increase in deal counts. So those are some of the areas where we're seeing a lot of recent growth in energy.
So, I mean, you all work with startups, and as we saw earlier, everybody except one person is interested in how to raise money and it is recognizing that there's a lot of challenges right now. Do you have any advice for startup entrepreneurs? Laura, we'll start again with you here for when they're thinking about raising money.
Yes, I would say a theme that I have been seeing as well as a general reframing when we're talking about climate technologies. We're talking more about affordability, we're talking about reliability, we're talking about infrastructure. A lot of these technologies are more dual use. We're framing this as an affordability opportunity. And so I would say that investors are really looking for strong business fundamentals first and foremost, with environmental benefits and climate benefits as being sort of like a force multiplier. So what we're telling companies is to really get the business fundamentals down, present a strong business case, and the climate impact and the climate benefits are really what sweeten the deal, but don't make the deal.
Andy, how about you?
Yeah, I agree with that. So I heard somebody else say this on a panel, and I think it's a great kind of one line. Like, the Earth is not your customer, right? I think we might want it to be, but the reality is it isn't. It isn't paying the bills. So it's about economic fundamentals, I agree, and thinking about how we reframe the technology that you're working on along things that matter in this current climate. That is price. I think energy buyers and what we've seen from people in the energy sector, even in the previous administration, is really what they were often buying was redundancy and resiliency. They were less caring about that sort of price component of it. And I think, the recent events in the Middle East have really highlighted the importance of redundancy and resiliency, particularly in the European markets, where we've seen a lot of our companies pivot to the European market because there is still interest in that market in these technologies, because not only are they cheaper, but they also offer a form of resiliency and redundancy to a geography that really has no natural resource to produce power. So yeah, I would say it's just thinking about what are the underlying fundamentals for the businesses or for your buyers, and making sure you're highlighting those. And I would say we're not really talking about sort of the climate benefits as part of that at this point.
Interesting. Elizabeth, how about you?
Definitely agree with what everything was said. I think this is what I tell a lot of the companies that I'm investing in already. I think I have spent a lot of time working with companies on reframing their messaging, which has been said already, using less of the word climate, more around energy independence, resilience, energy security, national security, supply chain security, these types of things. I think this is the messaging that works today. And overall, just making sure if you're starting a new company, you're building a product that has a buyer today. You're not going to bet on waiting for the market to develop or waiting for more buyers to come. I think that's precisely the issue we saw with direct air capture. A lot of these really amazing technologies that have scaled up to maybe a pilot stage, and then of course the political climate changed and the buyers did not come. So I'd say those are the main pieces I'd focus on today.
And Ram, I'm guessing since you're associated with a large corporation, you're very focused on the economics.
That's true, but more than anything, product market fit, right? I think when you think about any new business, it's all about customer, right? How do you actually solve a problem to the customer? So be obsessed with your customer problem. And that's really critical. And spending enough time with the customer to do unbiased kind of interviews, get their feedback on what their problem that they're facing today and what they're going to be facing in the future, so that you're not just ready for today, but also as things are evolving and changing. That's quite critical. I think product needs to be somewhat globally applicable. I think in this day and age, it's very hard to bring a solution that only applies to one market. So that's another critical piece. I think also, if you're thinking about solutions that are going to be very large, big impact, like gigawatt scale, don't just go after the gigawatt right from the get-go. If you look at lithium-ion batteries, why they are actually today one of the leading energy storage solutions in the market, they started out very small. They were able to prove out in the portable world. And then innovations took time and expanded into other markets. So think about beachhead markets where you can enter in, learn a lot, but not at a huge cost to the investors, so that you can go to the next level. Otherwise, you fail too fast or too big, it's pretty hard to recover, right? So you have to have enough time to be able to adapt and pivot. Invariably, all businesses have to pivot as you learn more from the market.
I think that's really good advice. And, a lot of times when we're working with entrepreneurs and they're trying to go from seed to Series A, it's all about that next investor wants to see that a certain amount of risk has been taken out of the equation. And at some point that has to involve your customer, that you have proof from a customer that's using it. Ideally, it's the big customer, but maybe, as Ram said, it's a smaller subset of the market. I'm curious about this whole sort of challenge that so many of these entrepreneurs face. You know, do you guys feel like the investment community has shifted later and now they're saying you need to show us more proof before we'll invest? Or are they still taking as much risk as they used to? And, you know, I see a lot of entrepreneurs get into this situation, especially over the last year, where they're just saying, it's a chicken and egg situation. I feel like I'm caught here where I can't prove that a customer is going to use this until I get money, and I can't get money until I have a customer. How do you guys think about that, and how do you advise these early stage entrepreneurs that they can get through and get that proof point to get the next level of financing? Let's start with Andy.
Yeah. So to the first part of that, are investors taking less risk, different risk, moving the risk? I think the answer is yes, but also it depends. Right? Like I feel like we've got one segment of the market where we're just piling capital in the data center area, which to me is a form of risk. Like I think data center growth is real and load growth is real. But if we look at projections around, like, let's say the amount of compute growth that's projected versus the amount of capacity in data centers that is going to come online, well, there's 3x the amount of data center compute power that's projected to come online relative to the compute that's coming online. So every single startup we see is going after the data center market, but the reality is most of those projects aren't going to get developed, or you're 6, 7, 8 stacks deep in the queue, right? So are we really understanding how these companies are going to get into that data center space? And we're just putting tons and tons of money towards that sector. I think that's kind of a shifting of the risk towards the hot, hyped area of investing. At the same time, in the areas that people aren't shining as much light on, what I think people have learned from the last 5 years of investing in the sector is we need to look at how we think about taking much smaller steps, de-risking the technology in a more modular fashion, in a more stepwise fashion, and really not going after technologies that are going to need a $250 million first-of-a-kind facility as the first build-out, and thinking about how we do that at a $10 million or $20 million sort of modular factory-built facility. So that's kind of like what I'm seeing in the market there.
And do you see, just to follow up on that, do you see government funding playing a role to help a company get to that point?
In today's climate, no. And I would argue that in the previous administration, a lot of the government dollars were going into already de-risk technology and big corporates that didn't necessarily need that government support to deploy the technology.
All right. That's a hot take. Okay, so Elizabeth, how about you? How do you see like this challenge of getting to the next stage of funding, and how are you advising entrepreneurs on how to do that?
Yeah, I think, like Andy said, investors are definitely expecting more book traction earlier. I've definitely seen a shift in what's expected even for a seed stage company today versus 2-3 years ago. I think along the lines of what Andy's saying, figuring out how you can demonstrate your product at a smaller scale. Also, just having conversations with corporates as early as possible. There's a lot of corporates that are willing to do some sort of, like Siemens Energy is a big example in Germany, willing to do some sort of piloting and testing with you from day one. And maybe they're not going to be a paying customer, but at least you're demonstrating some sort of direct interaction with corporates and really designing for what they need. I think that's something that really speaks well to investors. And also, this current fundraising environment is why we also have an incubation side of the house. We do understand that it's very difficult to raise funding right now, figure out who the right investors are, and really navigate the VC landscape, which is notoriously very much a black box. So this is also why we develop the idea, we develop the business model, get the business to a stage where we can bring on the right founding team, and then we're really partners with the founding team deeply for quite a while. We write their first check. We sometimes bring in other investors for the first check. Sometimes we do the round ourselves, and then we work closely with them to find the right investors to get on board next. So that's also been a part of our strategy in terms of having both the fund and the incubator.
Great. So I saw Daniel giving me a signal over there. Do we have time for Q&A, Daniel?
Yeah, absolutely. I just want to make sure we had enough time for Q&A, but if you have like one last quick question you wanted to ask, I don't want to stop you.
Well, I wanted to give Laura a chance to plug the New York program again. So with this idea that, you know, entrepreneurs may need help to get to that next stage of funding, and, you know, as Ram said, getting that first customer, proving it out, is that something that your programs help entrepreneurs to do, to connect to the industry partners?
Yeah, exactly. Just to respond to the prior question as well, I definitely see that the goalposts are moving. Series A milestones are now seed milestones, and we're definitely advising our companies to be more customer ready and less investor ready. But the Scale for Climate Tech program that we run in New York State exactly looks to solve for this challenge. And so we work with companies to line up pilot sites, to line up clients and customers, to line up manufacturers and supply chain partners, exactly to help de-risk the business model so that they are able to go out and successfully raise when they are ready to raise. And so this is the sweet spot that we specifically focus on within that program.
Excellent. Okay, so let's open it up to Q&A from the audience. Anybody have a question?
Yeah, and of course, I'm going to sound like a broken record, but if we have any students in the room who would like to ask the first question during this session, please raise your hands. They're all still working on their homework. Okay, any other questions? Yes, we have one over here.
Thanks, Daniel. As you can see, I'm not a student, but I wanted to thank you for the very insightful panel. And the question I have is related to folks who are running venture studios, and that's part of your model to build new teams. What is your preferred method, in addition to events like this, to interact with universities, again, sort of the engines of the new technologies and new early technologies? What is your preferred method working with us, and, you know, how can we help you find your new pipeline?
It's a jump ball. Anyone can take it.
I'm happy to take this one. I think my preferred method has just been I'll reach out to whatever the spin out office is or entrepreneurship center. In this case, I actually was connected to this team. I recently moved back to New York from Berlin, so I've been reestablishing my US connections. And I just figure out who to email is always my starting point. And then from there, I'm connected with the right team members. I like having roughly every 6-ish months calls with the core team member who has a view of all of the startups and students and then can direct me to those companies. And I like, as a Series A investor, used to be starting a seed stage investor, I like talking to students as they're working on their technology and then also as they're spinning out. And the ones that I see as a strong potential fit, I'll have calls with them also roughly every 6 months prior to a potential investment, helping them think through their messaging, storytelling, helping connect them to the right pre-seed investors, and just really getting them ready for the next stages of funding.
Great, thanks. Other questions?
Yeah. Hi, Briggs White, previously with DOE, now a consultant. My question would be, I know there's a lot of leadership in the region that would really like to grow on the clean tech sector here and really kind of build that up, increase the number of businesses and scale those that are already here. Just any advice maybe for economic development or other leadership in the region and what they can do to kind of grow that business environment?
Economic development, that sounds like, Laura, that's up your alley here.
I think understanding and playing to strengths is really important, not believing that, you know, any particular region can be competitive in every aspect of the clean tech sector or climate tech sector that they're looking to grow, but what is unique and valuable within this region, and how can you sort of think more broadly around economic development outside of just Pittsburgh or the southwestern Pennsylvania area. So I think it is really interesting that we're here in Pennsylvania and there's a lot of folks from New Jersey and New York, and it really just shows how interconnected our economies are and our supply chains are. And so even when I'm in New York and I'm thinking about building New York programming, I'm thinking about how do I partner with and work with folks in southwestern Pennsylvania to think about how do we expand sort of the manufacturing resources or some of that deep tech early innovation that's coming out of institutions like Carnegie Mellon. How do we work in upstate New York? How do we work through the Northeastern Corridor? How do we work in the Great Lakes region? So I think it's part one, it's thinking about what is unique within this specific region, and then how do you expand that and think much more broadly in sort of the larger interconnectedness of all of the resources that that you have within the Northeast and across the U.S. So that's one thing that I would think about, and I think that the strengths of this region are very much anchored in advanced manufacturing and within the energy sector as well. So I think that there's a lot of really interesting work that I'd love to be doing more closely in the area out here too.
Great, thank you. Next question.
My name is Raj Tadipatri. I'm from Ohio Valley. Continuing with his question, I have two parts. One is, thank you for bringing the geothermal. I thought it is dead because the government subsidy tax benefits 10 years back. I took the advantage of it, but glad to hear that. What are the opportunities for the small businesses in that space? You talked about huge investment that is going on, and I would like to hear that. And second thing is, manufacturing and data centers are competing each other, because in this region, it is coming back advanced manufacturing, also data centers. And the data centers are focused in the major cities. Is there any development going on in the small towns, rural areas? Because that is where you don't see that growth.
So we have two questions. So the first one is opportunities for small businesses within the geothermal sector. Is that right?
Yes.
And then the second question is, how can areas outside of the big cities participate in sort of this growth
Decentralizing
in energy and everything else and data centers?
Thank you.
Okay. Geothermal, let's start with that one. Elizabeth.
So I think my thinking here is, I would say not as much opportunity for small businesses on geothermal power production, so utility scale power production. Andy, please feel free to jump in here. At least in Germany, I'm much more familiar with the ground source heat pumps, which use shallow geothermal for heating and cooling. In Europe, a lot of the drilling that's done for that, again, at much shallower depths, is done by smaller scale drilling operators because you don't need specialized equipment for it. I've not looked at this space as much in the US. We've been much more focused on power production. So, Andy, curious if you have any insights here.
That was going to be my response. Ground source heat pumps. That's the answer.
And Ram, it looked like you were ready to jump in on this one too.
No, not this one. But
Okay.
the other question.
Okay. The next question. All right. Next question is, how can smaller regions or areas outside of big cities?
I think distributed energy in general has a lot of benefits. And so I think more and more we're going to see underutilized resources that are on the distribution side that people are going to start looking at how do we actually effectively use. If you look at today, there's a lot of capacity on the distribution side, and that's not utilized because utilities have to plan for that excess capacity to manage actually because EV charging, for example, it's not all fully utilized. And so how do we actually intelligently manage that would require even perhaps looking at distributing it further away from the city, other ways to expand. So I do think that that would be an opportunity as better energy analysis on the distribution side comes into play.
So are you saying, on the distribution side, in terms of distributing energy, or are you saying distributed production of energy?
I think both, right? I think load and production both can be much more distributed. You don't need data centers that have to be, hundreds or thousands of megawatts. You can look at other solutions that are already edge solutions that are coming into the market. And so I think both load and energy production can be distributed much more.
Great. Laura, any thoughts on these questions?
Nothing in addition to what everyone's already shared, yeah.
Okay. Any next questions from the audience?
I think that's all we have
Okay.
time for
Great.
today. But Matt, Laura, Andy, Elizabeth, and Ram, thank you so much for this wonderful panel. Please join me in giving a round of applause to this.
Okay. Thank you.